Hello, and thank you for watching this presentation called Starting a Hedge Fund in 2009. My name is Bart Mallon, and I'm an attorney working in the hedge fund industry. I also run a blog focused on hedge fund information and hedge fund laws. It's called the Hedge Fund Law Blog, and you can find it at www.hedgefundlawblog.com. I have produced this presentation to give startup managers an overview of the hedge fund formation process. I have included general overviews of the laws involved and the major items a manager will need to consider when starting a hedge fund. This is not designed to be an exhaustive presentation, and I will try to proceed as quickly as possible. Even so, the presentation is 18 slides long and will probably run about 20 minutes or so. As there's so much material to cover, I'm leaving longer explanations for the blog, and I have linked to resources on my blog which will provide further background information. Please also note that I have a disclaimer at the end, as well as my contact information. With that, let's proceed with the overview. As you can see here, we're going to cover many topics related to hedge fund formation, and I think you've had enough time to kind of see the major items here. We're going to go over some of the structural issues, some of the legal issues involved, talk about the service providers, the timeline, the documents, and of course the major issue, raising capital. And with that, let's into the initial items to consider. There are basically two issues that you are really going to want to think about as you're starting your fund. First, who will be your investors? And second, how will you get to where you want to go? The reason why I feel these are good questions for you to consider at the very beginning is because these are questions that a lot of managers don't really think about at the very beginning, but which influence some of the structural issues with regard to the fund, but also how the manager thinks about moving forward and structuring the fund. That is to say, I always advise managers to really think about the business considerations involved in starting a hedge fund, because the service providers can help you out with all of the legal issues, admin issues, audit issues, but with regard to the business issues, you as the manager are really going to need to think about exactly how you're going to get to where you want to. And I just wanted to kind of mention that at the beginning, just so you think about that on a moving forward basis. With that, we'll go into the hedge fund characteristics. There are three major characteristics that people think of when they think of hedge funds, and the first is trading strategies, second is fees, and then the third major characteristic is taxation. Now, with regard to the question of what is a hedge fund, typically a hedge fund is just defined as a pooled investment vehicle for both where the investors invest their money and the managers manage the money. It's a very simple structure, but has many complex pieces to it. Now, with regard to trading strategies, we've got traditional trading strategies, and these include such things as long-short equity, market neutral, short biased, long biased funds, macro funds, sector funds, convertible bond, convertible arbitrage, event-driven strategies, distressed assets, emerging markets, and managed futures. There are also more non-traditional trading strategies, and these are going to be things like forex funds, life settlement funds, asset-based lending funds, green funds, horse racing funds, gambling funds, sports betting funds, charitable funds, all sorts of funds that basically any sort of fund that managers can think of. And then there are the other types of pooled investment vehicles that you are also probably familiar with, real estate funds, private equity funds, VC funds, hybrid structures, and of course fund of funds, which also can fit within that traditional strategy as well. Moving on to the fees, their hedge funds traditionally are known to have a fee structure of 2 and 20, meaning a 2% management fee and a 20% performance allocation. That standard fee structure is probably going to be changing over the next few years as the markets have really changed what investors are willing to pay for hedge fund products. The final major characteristic of hedge funds is taxation, and there are a couple of characteristics of that taxation that is especially nice. First of all is pass-through taxation. With pass-through taxation, the hedge fund itself is not taxed, but the investors in the fund are taxed. Now, if the fund was taxed as a corporation, like any of your standard operating corporations, then there's generally going to be double taxation, tax at both the corporate level and at the investor or shareholder level. With hedge funds, you don't have that. You have pass-through taxation. The second tax issue is that there is a tax benefit for the hedge fund managers in that they receive an allocation for their performance fees instead of receiving the incentive allocation as ordinary income. So the benefit is that if the fund has underlying long-term capital gains, that character is passed through to the manager, creating some tax savings to the manager. This has been one of those hot-button political issues lately, and right now it looks like it might be staying, but we'll see. So kind of keep in tune for that. Keep reading the Hedge Fund Law blog, and we will always be updating major issues like the tax issue. Going now to a basic hedge fund structure. The basic structure consists of a hedge fund entity itself and a management company. Now, the hedge fund is typically established as a limited partnership in Delaware. Sometimes they're established as LLCs, but for the majority, they're established as limited partnerships in Delaware. And the fund is managed by a management company, which is structured as a limited liability company, an LLC, in the manager's home state. This diagram here kind of shows the structure where we've got the hedge fund investors as the limited partners in the fund. We've got the management company as the manager of the fund. We've got the movement of, or this slide actually tries to show you the movements of money as well. You can probably see this better on my website, but just to give you kind of a quick overview, when the investors invest in the hedge fund, they'll typically wire money into the bank account, and then the manager will have the funds wired to the fund's brokerage account, wherein the manager will begin trading the fund's assets, and then if there is the payment of management fees and performance fees, generally that will be done either simply as an allocation on the books of the fund, or through direct payment through the fund's bank account, or potentially even the brokerage account. The exact manner in which any individual fund will go through these mechanics is likely to differ, but this is kind of the basic fund structure. And if you'd like to see more, definitely go to the in-depth slide on my webpage.